Hi everyone. Today we'll discuss Ind AS 29 financial reporting in hyperinflationary economies. So we'll be covering this topic today. Uh, what is cumulative inflation? Hyperinflationary economies are economies where the cumulative inflation in the last 3 years is 100% or has approached 100%. Then it is a hyperinflationary economy. Hyperinflationary economy, money loses power and we have to restate the financial statements. All items are converted to general price index of the country, and then, if required, if the parent is in India, convert to INR. Example: if the machinery book value is 70,000, it will be it will take 25 lakhs to replace the machinery. Then the same is not comparable. Applicable to standalone and consolidated financial statements. Indicators of hyperinflationary economy. General population keeps its wealth in non-monetary assets and relatively stable foreign currency. Amount of local currency are immediately invested to maintain purchasing power. Prices are stable in foreign currency. Transactions include the expected loss of purchasing power. Interest rates, wages, and prices are linked to price index. The cumulative inflation is 100% or more than 100%. Steps for hyperinflationary economy. Identify the general price index. Restate the comparative financial information. Restate the historical costs in the financial statements. Restate the current cost in the financial statements. Account for gain or loss on conversion. Consider other practical implications. Make disclosures. General price index is the RBI index or consumer price index. Example IMF or World Bank. How to calculate price index on compounded basis. Example: assuming inflation is 20% in year 1, 30% in year 2, 40% in year 3, calculate the cumulative price index. How to calculate the cumulative price index is mentioned below. 100 into 120%, that is 120. 120 into 130%, that is 156. 156 into 140%, that is 218. It will not be addition of 20, 30, 40, that is 190%. Uh, would not be the correct answer. 218 would be the correct answer. Prior year financial information needs to be restated. Prior year figures into index at current date, divide by index at the prior reporting date. Current year items restatement. Balance sheet restated at GPI, General Price Index. Monetary items, no restatement. Assets and liability restated at General Price Index. Non-monetary items, if carried at net realizable value or fair value, then not to be restated. For others, to be computed at General Price Index. Inventories of finished goods restated from the date of purchase or when conversion is done. PPE that has been devalued restated from the date of revaluation. Owner's equity restated from the date of contribution. Income and expenses restated from the date of transaction. ABC Limited is a company situated in hyperinflationary economy and having its financial information as on 31st December 2018 as follows. PPE 600 purchased on 31st December 2015. Intangible assets 150 purchased on 31st March 2016. Inventory 1800. Inventory has been held for 9 months. Uh, Trade receivables 2000. 60% of trade receivables were from 30th April 2017. Cash 400, total 4950, share capital 700, retained earnings 2500, uh, borrowings 250, borrowings were raised from 31st March 2018, trade payables 1500, total 4950. General price index is given below. Uh, 2014 100, 2015 150, 2016 190, 2017 220, and 2018 uh, 280. So we'll go by this balance sheet after adjusting inflation. PPE. We started with PPE. PPE is 31st December 2015. So in December 2015, the price is 150. So PPE value is 600. 600 divided by 150 into 280. 600 divided by 150 into 280, that is 1120. Intangible, intangible, the price is 150, and intangible is there from 31st March 2016. In 2016, the price is 190. So 150 divided by 190 into 280. 150 divided by 190 into 280, 221 will be intangible. Inventory, inventory, uh, inventory has been held for 9 months. Uh, 9 months. So the price flow from 9 months is 60. 60, 60 into 9 divided by 12, that is 45. 45. So 220 is the price of 2017 plus 45, 265. So 1800 divided by 265 into 280, 1901. Trade receivables is a monetary item, no restatement required. Cash is a monetary item, no restatement required. Total 5643. Share capital is from the inception 2014. So share capital is how much? Share capital is 700. 700 into 280 divided by 100. 700 into 280 divided by 100. 1960. Borrowings, there is no restatement required. 250. Borrowings were raised from 2018, and 2018 is the current year, so there's no restatement required. Trade payables is a monetary item, 1500, no restatement required, and the balancing figure would be retained earnings. Balancing figure would be retained earnings. So this the total of assets minus total of liabilities till trade payables would be the balancing figure of retained earnings. That is 567. So this brings us to the end of session. Please do like, subscribe the channel. Thank you so much.